So the dollar is sitting just below 97 today, not because it's confident, because the market is basically, on holiday mode. US markets are closed for President's Day today, so liquidity is thin, and thin liquidity has one job: make small moves look dramatic. But here's the real question. If inflation cooled to 2.4% and the market is now eyeing a June or July Fed cut, what happens when the Fed minutes hit the table? So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief. During this session today, we will be breaking down currencies, commodities, and indices, and the theme today is relatively clear. Holiday-thinned trading, rate cut expectations, and a market that's still trying to decide whether it's risk-on or just confused. So let's get into it. Let's kick things off with currencies, more specifically Euro USD. So the Euro is trading near $1.19, still close to that 4-year high above $1.20 reached late January. What is supporting the Euro right now? Well, signals that the ECB is largely untroubled by the Euro's appreciation. ECB president said inflation outlook is in a good place, but warned against overreacting to short-term or volatile data. The euro has also gotten support from reports that the Bank of France governor will step down in June, well ahead of the scheduled end of his term in October 2027. On the US side, the dollar has been pressured after benign inflation data. Headline inflation slowed to 2.4% from 2.6% in the previous 2 months, and below the 2.5 forecast. Monthly inflation eased to 0.2%, below expectations of 0.3%, but the US isn't exactly falling apart. Payrolls rose by the most in more than a year, and unemployment unexpectedly fell, pointing to a stabilizing labor market. Markets are now pricing in a Fed cut in July with a strong probability of a June as well. The next catalyst during this week will definitely be Wednesday's Fed minutes, as well as Friday's Q4 GDP and core PCE data. So Euro USD today is basically a rate cut expectation story with a holiday filter on top. ECB comfortable tone plus softer US inflation supports the euro, but thin liquidity can keep price action muted and choppy. So ask yourself, does Euro USD stay comfortably near 1.19, or does thin trading create a surprise wobble? Well, let's look at the charts. Euro USD is trading near 1.186. The stochastics on the 4-hour time frame is sitting around 37, pointing to waning momentum. Key retracement support is currently at 1.183, which is the 50% Fibonacci retracement level, followed by 1.177, which is the 61.8% Fibonacci retracement level. Now, on the top side, if it stabilizes above 1.189, it could rebound towards 1.198. However, failure to build a base above the key support keeps it vulnerable to further losses. That being said, let's move over to commodities. Silver is slipping today, down more than 1% towards $75 per ounce after reversing gains from the previous session. And the key phrase here is holiday hit trading. Volumes are subdued due to market holidays, not just in the US, but also in China and a lot of other countries. What maybe drove the prior pop? Well, on Friday, silver jumped nearly 3% after soft US inflation data reinforced expectations of a Fed cut later this year. And markets are also now, again, as stated, pricing in a cut in July, with a strong probability of one in June. And that has led investors now to turn to the latest Fed minutes and the Fed's preferred inflation gauge, the core PCE, for further guidance. China, however, matters here too. So mainland China markets are closed this entire week. That is Monday to Friday for Lunar New Year. Chinese traders had driven a speculative surge in precious metals recently, prompting authorities to curb market risk through measures. Silver peaked above $120 an ounce in late January, falling to around $64 an ounce earlier this month, as sentiment reversed and is now trading in that mid-high 70s. Silver is not weak today. Let's clarify that. It's just trading with volume turned down, like trying to throw a party when half the guests are still on holiday. Let's look at the charts. Silver bounced from that $74 low but remains capped below 97. It's hovering above a downward trending 100-period EMA, highlighting bearish bias. Key levels to look out for, well, resistance is currently sitting at 78.5, followed by 84 and then 92.6. Support is currently sitting firm around $74, followed by 64, which is the Feb low. And now let's finish things off with equities. The NASDAQ 100 is edging higher in thin trade, with the US 100 up about 0.2% near 24,760. But the bigger context here from last week is, well, Wall Street ended last week weaker. The Dow was down 1.2%, S&P was down 1.4%, and NASDAQ was down nearly 2%. Pressure came from declines across financials, communication services, consumer discretionary, and technology. Sentiment deteriorated on concerns around elevated AI-related capital expenditure and the risk of structural disruption to select industries. Among mega cap tech names such as Apple, Amazon, Meta, Alphabet, and Broadcom fell between 2.3 and 8% over the last week. However, there are a few additional things on our radar for this week. Another round of corporate earnings for directional cues, with results due from Walmart, Warner Brothers, Discovery, Bookings Holdings, Deere & Company, and Palo Alto Networks. And macro-wise, obviously the market is looking ahead to the Fed minutes, Q4 GDP, and core PCE, because rate cut expectations remains central. So in essence, ask yourself, if rate cut expectations firm up into that June-July period, does tech regain its footing, or does the AI disruption concerns keep sentiment fragile? Well, let's see if we can answer that question by having a look at our charts. The index is currently trading just above the support at 24,600. It has been relatively range-bound since last year, September, trading between 23,800 and 26,200. On the upside, a sustained break above 25,000 could lead to a retest of the resistance level at 25,800. Alternatively, a break below 24,600 could lead to a decline towards 24,200, with that deeper target sitting around 23,800. So traders, tomorrow liquidity comes back. And now we need to find out, well, does the market's attention span return with it? Watch what happens when the focus shifts from holiday thin trading to the real drivers, Fed minutes, GDP, and core PCE, because right now the dollar is steady, the euro is supported, silver is wobbling, and NASDAQ is trying to stay upright. But one hawkish or dovish hint from the Fed minutes could turn quiet Monday into why is everything moving Tuesday? And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX.com and, well, go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.